Hi, and welcome to peer-to-peer lendingtips.com. Well, England surprised the world and itself and voted to leave the EU. Brexit happened, but what does it mean for peer-to-peer lending? You need to watch this video. Hi. So, yep, it happened. The surprise happened. England voted to leave the EU. And what does this mean? So let's look at what happened. The markets did the only thing they could possibly do in that situation, and they panicked and we had chaos. There was no other way, nothing else was ever going to happen. Things are stabilizing now. They're nothing like they were before, but they have stabilized. Again, that's just going to happen. Markets hate uncertainty, and the Brexit vote created a large amount of uncertainty. And the second thing that happened, which had to happen, and there was really no other way it was ever going to pan out, was the pound devalued. Again, because of uncertainty. So these things we know they've already happened. Let's look at what's going to happen or what we can reasonably expect. So the big thing that we all look for in peer-to-peer lending is the attractive interest rates, the returns on our investments. What's going to happen to the interest rates we make from our peer-to-peer lending? Well, here there is bad news. There is already downward pressure on the interest rates globally. The sluggish data out of China, the sluggish economies of the world, not to mention countries verging on recession. Just look at what's happened in the bond market, both corporate bonds and government bonds. The yields are going down, returns are going down, interest rates are going down. So this is happening now, and for the short to medium term, there won't be any huge change, we do not believe. So is there a positive we can see from that? Well, personally, my funding circle returns have dipped. We're now hovering at, the last count was 4.6%, which is down, a percentage point easily from the peak. And that's not good news. But any silver lining could be that if you're making almost 5%, are fully diversified in this current economic environment, it could be worse. It's not as good as it was, but that could be worse. But interest rates have been hit and will continue to be hit. Let's look at the next important part about the aftermath of the EU Brexit vote, and that's the default rates that companies are going to be making. Well, if you look at the EU peer-to-peer market, the vast majority of peer-to-peer loans, especially through the true peer-to-peer lenders, are to small and medium companies, the SMEs. There's good and bad news here. There is no simple answer for everything. The good news is that a lot of people are saying that small to medium enterprises that have been bogged down with European bureaucracy and European red tape are now free to look elsewhere, and also, depending on the agreement that England forges for itself, may have less red tape going into different markets. That could definitely be a positive. It also frees our hand to forge business relationships with other countries. So, for example, lots of people are talking about new possibilities within the Commonwealth and beyond. This could be a positive for SMEs. However, the flip side of the coin is if you look at SMEs, especially one might say in the southern part of England, that already have a large customer base in Europe, have a legacy and history of sales to Europe where it's all up and running. Now they're in uncertainty because we don't know and they don't know what deals are going to be forged with Europe. Who can tell that? So companies that are already established in Europe with a large percentage of their client base in Europe are going through tough times now, and that is a huge one. So there's good and bad possibly on the horizon. The other factor which is just so big, which could cancel out all the other factors, is the exchange rate. Now, this is great news for exporters. Obviously, if you're a company in England and you're exporting around the world and the pound has been hugely devalued, your exports are now cheaper to buyers in other markets. That's great news. It's Christmas. Christmas has come for them in many ways. They can now sell. Their cost prices if are the same, will be a great benefit to them because the exchange rate is making their products cheaper to other countries. However, the opposite is obviously true. If you're a net importer and your business imports a lot and the pound is weaker, it's going to cost you a lot more. So again, there's just exactly a double-edged blade here. Exporters are going to get the benefits. Importers are going to get all the pain that goes with seeing your business returns drop through something that's completely out of your control, the interest rate. So, in conclusion, this is a whole mixed bag. The initial huge chaos and uncertainty of the Brexit vote has passed. There is a downward pressure on interest rates, and that's not going to go anywhere for a reasonable amount of time. Default rates will be affected negatively for some companies. Other companies that now see new opportunities will have more business and default rates could reduce. But all of this means nothing if you're adversely affected by the change in the exchange rate for your business. So it's a complete mixed bag. All we can do as peer-to-peer investors is make the best decision based on the evidence we have available, keep checking our returns, and also if we do see a slight drop in our returns on our peer-to-peer investments, of course that's not what we want, but compare it to what other asset classes are you going to put your money in. Are you going to put them in bonds with the yields declining? Are you going to buy equities? We do come back to the fact that if you're making circa 5% returns even after all the traumatic effects of the Brexit vote, it could be a whole lot worse. So watch this space. Thank you so much. Okay, well, thank you so much for watching. Now, please do go ahead and subscribe to our channel. And for lots more information, go to peer-to-peerlendingtips.com. Thank you.